Hey friends, good week. How are you today? And this is the weekly review for the first week of November 2011. Are we going to have a rally, the last rally for this year? As it seems to look at the end of the week, yes, it is. The optimism from the European meeting and the optimism from the European leaders and their help program actually push the market strongly up, but as it looks right now, it's a question of time only until the next crash happens. So let's go for the charts and see what we might have for the next several weeks. I am bullish for a long run. When I say long run, I mean months or 2 months. And that's mainly because of the fundamental news. Mainly because of the fundamental news. I believe we are going to go up. I don't think it's going to be one way. I believe we're going to have strong and beautiful corrections, but it looks like the way will be bullish. At the opening of this week, I believe we are going to see some corrections. Why? Well, mainly because I don't believe China will go in and help to Europe, and from the sounds from China already, it doesn't seem like they actually go to help and to help with the money for their program. So the only question is where Europe will take the money for their help program. It's a question for long run. But for short run, let's take a look what we have. Euro dollar daily chart closed above the 200 moving average. All looks fine, all looks bullish. It still has to be retested. If we take a look on daily MACD, it's being divergent slowly already. Are we going to have a continuing divergence, something like we have had here on the last rise at the beginning of 2011? Well, maybe, but for euro to go higher, we still have to break above this trend line. Still have to break it, but first we still need to test it. It's around 143, 143.50. So the divergence is here, which already tells this up move is going to be limited. Most likely, it's still too early to celebrate, but most likely it's going to be limited. Let's take a look on the weekly chart. What do we have on the weekly chart? RSI looks like crossing the 50. 20 Bollinger Band just make the break up. Very interesting, but if we take a look on this trend line, on the previous trend line, it's being blocked here. So what's going to happen? Are we going to be bullish or are we going to be bearish from here? That's the question. I believe, once again, as I said already, we are going to be bullish for long run. How to enjoy the possible bullish move? Take this trend line on 4-hour charts for the euro dollar. If it will be being retested and create here some hidden bullish divergence on this area, we should go and look for possible buy. I do believe the euro will go and correct. If it's not going to reach for this trend line, we might go for the 1-hour chart and look for the possible bullish continuing divergence that will take us for a bullish move from there again. Several supports to look for: the 200 MA around the 141, and of course the previous broken level around the 140. From there, I believe the euro still has to go higher. 143.50 will be the first target. Then I believe the euro is going to test the 145 once again. That's my thought for the beginning of the week. Correction, then it will probably take us up again all the way back for the 145 if 143.50 will be broken. Aussie dollar is the next pair to look for, although the fact we still, and well, not still, we just have the beginning of divergence here. Although I believe it will affect the Aussie and we will see some serious crash, we will probably be bullish for this pair. But as long as this area, the 107.50, as you can see, or even a little higher around the 107.70, as long as it holds, it is, well, a resistance, a strong resistance. Based on weekly chart, it's clear bullish move. But based on daily chart, once again, there is a beginning of divergence, right? So it should go and correct itself before the continuing up. Based on 4-hour chart, this is how the correction looks like. Well, if it breaks through the last support, it will go and aim the 20 MA of the 4-hour chart. If it breaks through it, we will most likely go and test the previous support area or just the last trend line. Well, something like that. I do believe that the Aussie dollar will give a bullish signal since this area. And 110 should be reached within several weeks. That's my expectations for the Aussie dollar. Let's take a look on the pound dollar. It still holds, as you can see here, it still holds the resistance and the 20 MA. It does look bullish. I do believe it's going to be bullish, but first I believe we are going to see some good corrections. How to join a possible correction? Go for a 4-hour chart here. A bearish candle around this area with this bearish divergence should take us for the 20 MA of the 4-hour chart, and then most likely for the next area. For conservative entry, look to break through this line. The break below this line will take us most likely to 159 once again. As long as it holds below the 161.50, it should make the down move to the trend line, to the 20 MA here, around the 160.50 or even lower. So break through this line, if happens, will most likely take us to 159, the previous support again. So this is the story for the pound. Let's continue. We have a New Zealandian dollar, another interesting pair to follow, and we have same story as all the rest. We have the resistance area. We have one resistance area a little higher, just right here. We have the divergence, beginning of divergence already. It's a question of time until the big correction comes. But until then, I believe we're going to see small correction and continuing higher. For the New Zealandian, I believe it's going to make much higher for new highs long run. But here, it still has to break through the weekly 20 MA. Some pairs already did it, but New Zealandian still did not, and it still has to do it. Dollar Canadian, same story. It has to break through weekly 20 MA, so we can clearly say it's going down. Until it's not happening, it's still early to celebrate. Daily chart, same story. We have still more to go for 20 MA, for the 200 moving average on the daily chart, but the divergence is already in the very beginning. As you can see, it's going to be this way. Make the stop, make the correction before the serious beginning later. The investors sell the dollar Canadian, which is important to remember, but the investors are going to hold it for several months or even more. That's about dollar Canadian. Dollar franc, also interesting pair, reached the support area around the 0.8550, 0.85, that's the same area. It should make the stop and it should make the retrace. 0.87 will be target number 1. Daily 20 MA will be target number 4. Based on a 4-hour chart, that's what we could and might have. I wish we will see a break of this flag, a break and a visit here to complete the divergence and take us high. If it breaks through the last high, it will go all the way back to around the 0.87 and then might even go higher. So let's see how this week opens. Anyway, for dollar franc, as long as it holds below the 0.85, I stay bullish. If it breaks the 0.85, it opens the doors for all the way down for 0.83 or even lower. That's for this pair. Euro pound, another interesting pair to follow, as we have the resistance at around 0.88 and we have daily possible divergence here to take us down. As long as the daily 20 MA holds and the support area around 0.8675 holds, we cannot short it powerfully. If it will be broken, then it opens the door for short. And here, based on a 4-hour chart, we might have the 20 MA holding of the 4-hour chart Bollinger Band, 20 MA holding it with a bullish hidden divergence that will take it up. So let's see. As for now, it's a range, clear range in between the 0.8675 and 0.8820. 0.8820 is the same area, as you can see here. It's a clear range. Once one of the sides will be broken, it will take us for the next direction. I just want to remind you that the investors selling the euro against the pound, as they believe we are going much lower. Dollar yen, monthly long divergence. I believe it might go little lower, but it's question of time until this divergence will explode and take dollar yen all the way back up again. From my point of view, it's a ticking bomb, and when the move begins, I believe dollar yen will fly all the way up. Aussie against the Kiwi, also interesting pair with continuing divergence. Fighting the 200 moving average, still didn't retesting nor the 129.30, not the 128, and not the 20 MA of the daily Bollinger Band. It still has to go to these levels. Two ways to do it. First, to reach the 131.80, well below the 132, and then make the strong move, or instead of that, reach and from the beginning of the week making the down move to reach the supports. 129.30 support number 1 should be the target number 1. 128, 128.80 should be target number 2. If you take a look on 4-hour charts, you might see interesting situations, as we might have a triangle here. It might be a bullish triangle, it might be bearish. If the bullish move begins, it should go and duplicate itself to this area, which means might take us to the resistance, as we said, and then make the move down. If it breaks down from here, then we are going to see duplication of this line, which should take us for the support mentioned before. Beginning of the week is going to be very, very interesting, and this pair is going to be a very, very nice pair to watch for upcoming days, as the down move with a big correction will happen for sure. The only question is it going to happen from here or from higher to take it all the way down again? So it's going to be interesting week. It's going to be bullish, most likely, period, as the European leaders gives the market what the market was looking for, and that's what we will be looking to do. We are going to watch how we can join this up move, and we are going to join this move once the corrections on the short time happens. So I wish you a beautiful week, and thank you very much for watching this video, and good luck with the move. Enjoy the rally at the end of the year. Yours, Vladimir. Bye bye.